Hello? Hello? It's a bit too loud. Tabarnak! 10 minutes, là. A bit too loud. Okay. Tabarnak! 10 minutes, là. A bit too loud. Okay. Okay. It should be alright. Put it down a bit more, because obviously it's too fucking loud. So today, well, it's a new series, obviously, so not much to say. So we're gonna learn about trading. Yeah, basically it. We're just gonna get right into it. Obviously, I'm just not gonna do this alone.
Welcome.
Alright, let me explain to you guys who this is, right? He is a trading genius. Obviously, it's like it speaks for itself, I guess. He's just a trading genius, bro. It's like he will give you the sauce on everything, bro. I watched till like Liquidity Part 3, but then I was like, like I'm getting a new setup and all of that, and it's better to watch it again, and then I'm gonna be a bit better at remembering things, right? He is a very good mentor. PGR, man, it's like he's not gonna tell you like a bunch of bullshit just to make you believe that a fucking candlestick bounced off the floor, so it's gonna go bullish. This does not make, like, when I was like on Instagram, when I was a lot younger, I was already like starting to watch like all of these like trading like techniques or whatever, and it was like the scorpion method or like the fucking chair or whatever, bro. It's like I was like, oh yeah, that seems like so good. Yeah, like these seem like amazing. Like trading is so easy, but it actually is easier than finding a fucking scorpion on a chart, right? It's like you don't have to be a genius. It's just like you kind of have to remember like all the like you just have to kind of understand how the market moves, right? I'm gonna be trading off of S&P 500 and Nasdaq 100. These are like the top two, I guess, charts I trade with, because I think it's mostly like the safest. I mean, I haven't hit any trades yet, but it's with those two that I've watched most of the I guess I could say like all of the techniques, I guess. like liquidity sweeps, all of that, but I'm not like 100% sure of everything I see on the chart, so I'm just gonna rewatch it again, and at the same time it benefits the series, so I can actually start from the beginning. S&P 500, by the way, is 500 most popular companies or whatever, and Nasdaq 100 is like technological like companies, like the 100 most popular. Okay.
To day two. Day one clearly was not too difficult. You just had to sit there and watch me cry like a little bitch. But here we are, day two. We're actually looking at charts, but you probably won't learn much again because this is going to be a video from scratch, but you will gain, or sorry, this is going to be a course from scratch, but you will gain a couple things. I'm going to toss in some little tips that, you know, you probably didn't pick up when you were a beginner, that can help you along the way. So today we are going to be talking about candlesticks and price movement and understanding price movement within candlesticks. Okay, so we're on the S&P 500 right now, and pretty much every single chart you're going to have is going to look like this. Wow. Okay. Pretty much every single chart is going to have, you know, candlesticks like this, right? You can click through whatever ticker symbol you want, and you'll see candlesticks, okay? And these candlesticks describe price, okay? How do they describe it? Okay, through bodies and wicks, okay? These are called candlesticks because they leave wicks, okay? And these candlesticks tell a story. So, with that being said, let's move over here and draw our own little candlesticks. Okay.
Say goodbye to Slack because chat's here and it's inside ClickUp. Everything you need in chat is here.
And I know you're probably thinking, oh my God, I don't need to learn.
By the way, I just want to say I'm so fucking white. I need some sun. Like I just saw like on the video, bro. It's like I'm stupid white, bro. It's like I'm whiter than the fucking screen in front of me, bro. It's not normal. Okay, so now he's gonna explain candlesticks. Candlesticks is like the base that you need to understand. Basically, it's like if you want to trade and you don't understand candlesticks, you're fucked. But it's really easy. It's really, really easy. I'm gonna try to, like, he's literally gonna draw it for you guys. All right. Okay.
About candlesticks, I know you don't, okay? I know you don't, but this is going to be beneficial, trust. Okay, so these are two candlesticks, okay? Let's say, bro, how do I, okay, whatever. Anyways, okay. Ready? So we have two candlesticks. Let's dude, I wish I could color this thing. Okay, ready? This one is going to be a down candle. So I'll color it in like this. Actually, that looks terrible. Forgive me. We're going to make this, oh, here, I'm so stupid. There we go. That's a down candle. This is an up candle. Cool, cool. Okay, so we're going to do a quick overview of what these candlesticks represent, what the open and the close represents, what the body represents, and what these little wicks that they leave behind represent, okay? So, first of all, understanding candlesticks, okay, we need to understand what time frame we are on. There are so many little different time frames up here that I'm scrolling through, right? 1 minute, 2 minutes, 3 minutes, 5 minutes, 7, 8, whatever, okay? And if you're very new, you're probably saying, well, what do those things mean? that represents the time that it takes for the candlestick to close. Okay, so if we are on the 5-minute chart, which we are on currently, if one of these, let's just say this is an actual candlestick within the chart, one of these candles, this candle represents 5 minutes of price action, of price movement, okay? And the reason why these candlesticks are so beneficial is because we can read and see exactly what price did within those 5 minutes with just this one candlestick. Okay, oftentimes I can even be able to understand and pretty much just guess what is going on 1 minute structure just purely based off of a 5-minute candlestick or 2 5-minute candlesticks. And once you get good at this, you'll understand how to do that as well. But okay, we're on the 5-minute time frame. One candle represents 5 minutes of price action and market movement. Okay, so when we see a green candle or a bullish candle, okay, we see that it goes up and it ends right up here. Okay, green means boom, price went up, right? Everyone knows a green candle means up and a red candle means down. So in this instance, price opened right here where the body of the candle starts, and it closed at that 5-minute mark right here. Okay, so boom, right here is the open, and boom, right here is the close. Okay, we can put this thing down. Oh, oops, shrink.
Every trader on this floor uses these 3 main tools. Let's go and have a look what they are. Right, with the amount of
The close and the open. Cool, cool. Okay, now what do these little wicks that are left behind mean? That shows where price went during that 5-minute duration of time, okay? But it never ended up closing there. It just shows where price went, right? It left a little snail trail, okay? It's like you take a shit and you put on your underwear and it's like super white, like brand new Calvin Klein underwear, and your shit from a minute ago left a little snail trail. It's showing that you did go take a shit. To be honest, I don't know how this relates to this, but anyways, okay, it shows where price went. So that means, right, if there's a wick all the way up here, that means within this 5-minute candle, yes, it didn't close up here, but price moved up to this point, okay? And then same thing with here, okay? Down here was the lowest price point that price went within these 5 minutes. So now we know, okay, this is the highest point it went to, and this is the lowest point it went to, okay? Same exact thing on a bearish candle, okay? Just slightly different, okay? Instead, the open is up here, okay? And the close is down here, okay? So the close on a bearish candle is lower, obviously, and the open on a bearish candle is higher. Okay, remember, oops. And again, right up here is the highest point that price was able to go to, okay? And down here was the lowest point that price was able to go to. Perfect. Candlesticks fucking simplified by TJR. Now we can get rid of this bullshit. Okay, now we are going to talk about candlestick patterns. And I know what you're going to say. You're probably going to say, whoa, TJR. Whoa, 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 whoa. What the fuck? I thought you hate candlestick patterns. I do. I hate the candlestick patterns that are based off of mountaintops, fucking W's, head, shoulders. That shit is deep.
Okay, so he's saying exactly what I said earlier. It's like those bullshit fucking techniques that those Instagram like reels gives you. It's like, don't listen to that. It's bullshit, all right? It just doesn't work. It's like going to a casino. It's the same thing. Don't listen to these, bro.
Yes. I also hate candlestick patterns. I really hate every single candlestick pattern that is that contains more than 2 candles. The only candlestick patterns I like, because they can actually show you price action and dictate where price is going to go, are these single candlestick patterns. Okay, so let's look up if this thing will load. Candlestick patterns cheat sheet. Hopefully this pulls up the single candlesticks. Okay, good. It has some of them on this. All right. Let's pull this thing up and let's zoom on in. Okay. So, first of all, we don't give a fuck about this entire top row. Okay? I also don't give a fuck about anything in here. Anything in here, anything from here and below. I only care about dojis, long-legged dojis. Long-legged dojis and dojis are the same thing. Okay? Cross dojis and inverse cross dojis, dragonfly dojis, hammers, okay? Those are the only things I care about, okay? Just this row. Forget about all this bullshit. This is garbage, okay? No, we don't give a fuck. All right, just focus on this row right here, okay? And why are we going to be talking about this? Okay, it's because these candlesticks are showing price action and showing where price rejected and where it didn't, okay? So if I can honestly just find these on the chart, I don't know why I pulled that up, but with a candle, this is just like a perfect example. With a candle like this one, right? We see price opens right here. It doesn't go low, right? It pushes all the way up to this point, but then closes down here. Okay, this candle is essentially saying to me, okay, we have strong bulls, but not strong enough to close. Damn. Not strong enough to close all the way up here or here or here or here. We left a fat ass wick up here, meaning it was not strong enough to close above whatever was residing above here. And more than likely, it was taking this liquidity. Okay? So, right, we knew that price pushed up, closed still bullish, but there was weakness because it couldn't finish out this candle, right? Now, let's find another example, okay?
Are you looking to start your digital marketing agency? You are in the right place. I'm Mike. I was running my digital agency for 12 years and
right here. Okay, similar situation, but with a doji. Usually dojis, which are just small bodies of candles, okay? So when a candle looks like this, dojis are great for reading price action. Okay, it's usually small body, long wicks, or just small body of a candlestick in general. Okay, looks like this. Okay, something like that of some sorts. Okay, probably not that long of candles of wicks, but you know what I get. You know what I'm getting at. Anyways, dojis are great because they can show us indecision in the market and indecision with a bias in one direction. Okay, so when we see this bearish doji, right, we're obviously not taking a trade off of this, but we need to be able to read the candlesticks, right? These are the small things that intuition can build, that experience builds by being able to see and read these candlesticks, when most people aren't able to do that. Most people are saying liquidity was swept, we broke structure, but you guys can't even read these candlesticks. You don't even understand what these are saying to you, and they're telling you a lot of information. Okay, so this candlestick in particular, right, we see, boom, big sell-off down here, okay, and then we get to this candle. Okay, we get long wicks to the downside, but not a full body close, right? We don't see a big body close to the downside. It means we're losing bearish.
Okay, this is important. this part right here where he explains this, it is like, it just basically makes you understand how it kind of gives you an idea how to predict the kind of like the next candle after this one right here, right? Because you have that sell off, then you have that candle, then it sells, but it's not strong enough, so the buyers pushes back all the way over here. Yeah, a little pushback by the buyers, but still it wasn't strong enough to end up as a bullish candle. By the way, bullish means wait. So this is a bullish candle, and this here is a bearish candle. I don't know if you guys heard it earlier, but basically, bullish means the buyers because it pushes up, and when a bull attacks you, it kind of like rams you up, and a bearish slams you down, right? So that's why a bearish candle is a sell action, right? Yeah, so this here is important.
In particular, right? We see, boom, big sell-off down here, okay? And then we get to this candle, okay? We get long wicks to the downside, but not a full body close, right? We don't see a big body close to the downside. It means we're losing bearish momentum. Okay, and as you can see, we did lose it. We start consolidating, pull up a little bit higher, and then nothing fucking happens after that. Right, so we lost bearish momentum with this candle. We can see that through the long wick to the downside, and then it failing to close lower in a regular size candle, right? This is a doji. This is showing indecision within the market. Okay. Again, right, we see the long extension of a wick to the upside, all right, showing that, hey, you know, we pushed all the way up here, but we failed to close above here, right? We failed to close above these price points, and then what happened? We fell, okay? But this is not something you take a trade off of. This is just slowly learning and understanding, okay, these candlesticks and what they're trying to tell you. Okay, let's go over to gold. Gold can give us some great momentum, some great volume, and also shows us some great candlestick patterns. Okay, let's go to the daily.
Do not pay somebody to build you a Shopify store, because I'm going to do it free with 20 handpicked products by myself and my expert team, and professionally written ad copy for all of those products at no charge. And if you don't believe me, I dare.
I am so fucking tired of these fucking ads, bro. I swear I might get YouTube Premium at some point in my life. I might just get it because, you know, there's always that one motherfucker who's like, let me build you a free Shopify business for free. It's like, shut the fuck up, bro. It's like nobody wants your shit. Nobody fucking wants your shit. It's like nobody fucking cares, bro. Just shut up, bro. Honestly.
Where are we at? Okay. Right here. Okay. This is a great example. Okay. We push up, we come down. Okay. Yes, we formed a bullish doji, right? This is a doji candle. However, right, we failed to push up completely. Yes, we see strong rejection to the downside, and yes, we do see closures to the upside. Okay, this is why we cannot be taking trades purely off of candlestick patterns, because this is only one confluence. Okay, yeah, we see, boom, super strong rejection to the downside with this wick, and then we close bullish still, right? But we're in a downtrend. we are continuously breaking structure to the downside. Okay, so that's an example of where we can't let our bias get lost in these patterns. Okay, these are very, very minimal in what you need to trade, but it is good to understand and to know and to learn these. If you don't know them already, they're fairly simple. You really just have to know, right? A fucking strong close, which is what literally a regular candlestick looks like to you. So like this candle, for example, is just a strong close, right? It's full. It has not a high wick to the upside. If anything, a high wick to the upside on this candle would be even more of a reason for it to be a strong close. And then also, right, the wick to the downside is fairly small, again, compared to the body, right? So we had a move to the downside and we were able to close and continue down, right? And it wasn't just a wick to the downside and then a move back on up showing weakness. Okay, let's just keep going through and spotting these on the chart. Okay, again, right, this candle is a great example of something where like we see liquidity get swept in almost like a confirmation candle. Okay, right, we see this long wick to the downside. Price at one point, remember guys, we have to understand that price was opened here. So at one point in time during this week, price was literally a big red candle from this point down. Right, everyone probably thought this shit is going to the floor, right? Because, and this is where like your headspace can get fucked up, because people get so caught up in the candle that's forming and not the candle that has formed. Okay, we can only make bias and decision on candles that have formed, not candles that are forming. Okay, that's why we always wait for a close for a break of structure.
Do you want more customers from your ads cheaper? Do you want to make 15 and 20% more profit?
I don't understand how are there so many fucking ads. I don't remember it having so many fucking ads, bro. It's like insane. What the fuck? Alright.
You have to wait for that candlestick to close because, right, it's not an actual candle until price action is done within, you know, whatever time frame that we're on. Okay, so this candle, for example, we get a strong...
By the way, what he just said is also very important. Depending on what you're doing, do not forget that the basically the time frame is very important. Let's say 5 minutes. All right. It looks different, but it's just basically all the candlesticks of 1 hour extended, like on a longer period, I guess. Right? By the way, I'm not a pro, I'm just stating shit right now, but yeah. Oh, it's so better on a bigger screen. Cause I was doing this like on a fucking like shitty laptop, bro. It was lagging. I think I had like 4 gigabytes of RAM, and I tried like building like a website business, and it went so horribly. Honestly, bro, it was like the shittiest fucking thing ever, bro. Nothing was loading ever. Yeah, I'm gonna Where the f- Where the fuck is it? Yes. Qu'est-ce que c'est sûr, je suis câble, oui. Ah! Was this shitty fucking laptop? This one. It's a Chromebook. Just for you to understand, it's a Chromebook. Right now it's on sale on Marketplace because I'm never using that shit ever again. Not in my entire fucking lifetime. I'm not. There's no way. Anyways, now it's a lot better because I have a huge screen. Huge, right? All right.
Rejection to the downside, right? Price pushed all the way down here, but then nope, was able to, first of all, opens down here, comes all the way down here, and then rallies all the way back up to this point and closes up here. That is a very, very strong bullish candle, right? We see massive wick to the downside, tiny wick to the upside, meaning it literally closed almost as bullish as it could have, right? On most bullish candles, you're going to get some sort of wick, and on most bearish candles, you'll get some sort of wick to the top side or to the downside. But when it closes so fully like this with a strong rejection to the downside, that is telling you a bunch. That's telling you 1,000 words, right? That candle is telling you exactly where price wants to go. Okay, what does price end up doing? Rallies higher, takes out these highs, etc. Okay, so this is all that I want you to do for today. I know today, boring as shit. Boring as hell. You're probably like, what the fuck? But, right, we're starting from the beginning.
Okay. Okay, so basically he just tells you to, well, he tells me, right? He tells me to go on a chart and watch like these. I'm gonna go on a 15-minute time frame. Tells me to go basically spot like a yeah, kind of like this. Kind of like this one right here. Kind of like this one here. So the market opened like, fuck, bro. Market opened like there, like right on there. It had a slight pushback, slight rally on it, and then it just like kind of like ended where it started, and that kind of like indicates us of a potential bearish candle right after this one, right? But this is like a shitty example. Wait, I need the long ass candles. there's a very high percentage of chance that there's a lot of shit that I just go by. I'm not looking at it, but maybe I'm just stupid. Kind of like this one here. Market opened right there. It's sold right here as a bearish candle. Slight pushback on the bearish, but then the buyers just pushed it all the way over here, which indicates us that buyers are currently present on, well, the price action of the candle, which you can see next here. You can clearly see that there's not even a single I mean, yeah, there's a tiny little bit of bearish wick under there, but you can clearly see that the buyers are mostly stronger than the sellers, right? So big one right here. Then is it going like on what is this? Is this a downtrend? Alright, I'm still a fucking noob on this, but I'm learning. This is why the video is called Learn How to Trade With Me, right? I'm not a fucking guru now. I think this is a good example, right? Of what he tried to make us understand. Alright. Well, there's 56 videos, and he has like a lot of discipline like videos, like this one, discipline, goal setting, individuality, check-in, just like the check-in with us, like how are we and shit, how to take a loss, which is a very important thing to learn when you are day trading. I remember I was like kind of like trading off of like a pocket option, like a brokerage, and then I just kept losing and losing and losing, and at some point I started winning. Then I took another trade, and then I lost. I kept losing, and I lost everything. Yeah. Alright, let's go to trends now.
Banks in Canada are overcharging
fuck
you.
up.
Watch this.
Can't, bro, with these ads, I swear.
Camp, I believe, day 4 now, and today is going to be another trading day. Okay, so we talked about candlesticks, and then we had 2 talks on discipline. Hopefully you guys learned something from that. Hopefully you guys did your homework. But today we are going to be talking about trends. We're just going to jump right into it. No reason for us to sit around, okay? I have some notes on my phone so I don't get lost in my own thoughts, but we'll just jump right in. Okay, so trends within the market. Again, you're probably going to say, oh my god, this is recap. I know we have to cover the super basic simple shit before. Do I have bed bugs? No, okay. But before we actually get into the difficult stuff like strategy and actually executing, okay? Because all of these little things end up being like the massive umbrella over these small things that you try and master. You try and master strategy, you try and master execution, but you don't even know where the trend's going. You can't even read a candlestick, okay? So how do you expect to perform in the market if you don't understand these simple things? So with that being said, let's talk about trends, okay? So the first point that I want to talk about, why do we even care about the trend? Because it dictates where the market is going, okay? Markets move off of momentum, okay? So once market starts trending, okay, odds are it's going to continue in that direction, okay? So what even is a trend in the first place, okay? A trend is literally, it's almost like you have a basketball on a flat surface and you just push it, right? It's going to roll and roll and roll and roll, okay, because of that momentum that's pushing it forward, okay? Same thing with market, okay? When market gets a little push or a market structure shift, it's going to start trending, okay? So, whoa, glitching. This is why I need my PC, which is coming in like 3 weeks, but I ordered it and it's on its way. But anyways, why do we care about the trend? Because it tells us exactly where market's going. Okay, so the very first thing that we need to understand is how can we spot a trend within the market? And it's honestly one of the easiest and one of the most simple things taught in day trading, okay? So when market is trending higher, okay, we can do this. That was terrible, but when market is trending high.
All right, this is the important part, chat. All right, listen. This is the important part, all right? Wait, let me give you guys like a little something I'm missing about. Like, let me show these. Let's go on a higher time frame. Right, like this is an uptrend because it goes up, right? And this is a downtrend. Okay.
Higher. There we go. Put a little cap on it. It moves in higher highs and higher lows, right? It'll look something like this, just with a bunch of little candlesticks in the way. And we'll show real life examples of this on charts. But, right, this is like a very simplified version of a trend, right? This is a high, this is a low. When it pushes past this high, it makes a new high that's higher than the previous one, and it makes a new low that's higher than the previous one. Okay, so higher highs and higher lows, right? Just like that, and it continues all the way until it breaks its trend. Okay. So same thing with the downtrend, just the exact opposite. Okay, so for downtrends, it is lower highs and lower lows. Oops. That is honestly what a chart could look like though. Schmink, schmink. Okay, that was terrible. I had to do it with like my other finger, but because I don't have a mouse yet. Okay, so, right, downtrend, very similar. We have a high right here, then we make a low right here. Let's say we had a low here as well. And we had a low right here, right? This low is lower than this one. This high is lower than this one, and it continues. Okay, and it's really easy to see these trends. What? Oh, oops. It's really easy to, well, you guys got the point. It's really easy to see these trends within markets. Okay. So, right, if we just go to the daily, right here, okay, we see, or this is just a more recent break in structure. We can highlight this one right here. Okay. So right down over here.
Collaboration is key for team success. With ClickUp, you can easily manage your team's tasks and timelines in one.
Okay, we have boom, a high, then a low. Boom, what do we get? A higher high, then a higher low. Then boom, what do we get? A higher high, a higher low. Okay, boom, what do we get? A higher high, a higher low. Oh. Boom, higher high, higher low, higher high, higher high, now lower low because we just surpassed this. So what can we assume that market's going to do now that it broke structure? It's probably going to flip its direction, right? Let me get all these drawings off of here so it looks better. But you can see that, right, once we broke structure and changed direction of the trend, we continued that for a while, right? And now that we just broke structure, odds are we're going to start trending in the opposite direction for a little bit. Okay, so with this understanding, what can this help us do? Trends give us the overall idea of where market is going. Is it exactly how we are going to execute every single time? No. right? We that's not how we're not just going to go, okay, once the high gets pushed above, we're going to enter a trade, right? That's how you can get stopped out. There's a bunch of problems with that, and we want to optimize our entry. However, the trend is pretty much telling us what direction to place our trades in, okay? Because if market is trending in one direction, why in the world, right? If market is trending to the upside, why in the world would you try and take a trade to the downside? If the momentum is pushing it to the upside, wouldn't you want to ride that wave? Wouldn't you want to, you know, be on, right? It's like if you're in a car, right? If you're in a car and you don't have a gas or a brake pedal and you want to get to a certain point, okay? There's two roads that you can take, uphill or downhill, okay? Which car are you going to get in? The one that's going uphill or downhill if you want to get to the end of that road? You're probably going to want to go downhill, right? Because the momentum will just take you there instantly. Versus if you try and go uphill, you're not going anywhere, right? It's very similar with trading and these trends, okay? You want to be able to follow this wave, okay? Follow the momentum, because that's where price is going to go either way, right? There's no reason to try and catch a retracement because, one, you don't know how far or how deep that retracement is. Like this right here, we had a very small low get formed here, and this, we had a very big low. But the extension is always the same. The extension always goes past the high, right? We see the high get pushed through, high get pushed through, high get pushed through, high get pushed through. Every single time, high gets pushed through, okay? So with that being said, wouldn't it make sense for us to follow that momentum, okay? So that is our goal. If you can identify a trend, okay, which most of you guys should be able to do that because it's a fairly beginner subject, all right? But you want to follow these overarching trends, okay? And when I say overarching trends, this is where it gets kind of tricky because people get so caught up in all these different time frames, okay? They see different trends on a bunch of different time frames, right? There could be 100 different trend switches and changes on the 15-minute over the course of this weekly uptrend that we outlined, right? There's probably way more than that. There's probably like a couple thousand different trend switches and changes within that weekly uptrend on the 15-minute time frame. And that's where people go wrong a lot of the times. They get so caught up on these small time frames saying, oh, the 15-minute broke structure, but higher time frames hold higher power. If the 4 hour is saying, no, we're bearish right now, it's going to go lower and lower and lower, but the 15-minute just broke structure, why do we care about what the 15-minute is saying, right? We want to use the 15-minute in confluence with the higher trend. So, right, if the 4 hour, if the daily, if the weekly is telling us that market is going to go down and the 15-minute is telling us market's going to go up, why don't we just wait for the 15-minute to tell us, okay, market's going to go down now, right? That would make sense because then we can follow the trend of the market, okay, and then also scale down to the shorter term time frames, right? Because we know that these high time frames are going to push price in that direction, but we want an optimized entry, right? That's what I was just talking about. We want to go on these lower time frames and be able to catch the large high time frame trend moves, but with an optimized entry, okay? So that is why trends are so important. They literally help optimize your entry and help push price in the direction that you want price to go, right? Going against the trend is never smart, and this has honestly been one of my biggest struggles and issues in trading is trading against the trend and trading against my bias. I'm very good at being able to spot, okay, this is where market wants to go. You know, like I know where market wants to go on a high time frame. It's pretty easy to spot. However, when I get onto these smaller time frames, I'm like, oh, wait a second. This could be a liquidity sweep and then a retracement. But that's the issue, right? We can't be trading off of retracements. We have to be trading off of, we have to be trading off of,
The most valuable market information used by professional traders is normally ignored by retail traders.
Trading off of momentum. I'm sorry, I just spaced the fuck out for a second. Okay, so trade with the trend. The trend is your friend. I know it's stupid, but it's very, very true. Okay, the trend is your friend. And you're probably going to say, well, wait, TJR, I thought you trade off of liquidity sweeps. I thought you trade off of trends changing. Yes, we do, but on lower time frames, right? We trade off of that on lower time frames. So if we see a liquidity sweep, and if we see like a liquidity sweep on the 30-minute time frame, and then a break of structure to the downside on the 5-minute time frame, and the 4-hour and the daily are saying bear, 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 that's great. That's perfect. That means that we just caught the top of the next leg down. Okay, that's why I trade the way that I do. Okay, so now that we understand how to read a trend, how to spot them, right? So literally just higher highs and higher lows, and the next trading video will jump into break of structure, because that's going to be huge. Okay, I might even do 2 trading videos on that, because people do seem to get confused on it, which is pretty interesting, because it is a fairly simple concept to grasp, but I do want to make sure people understand it, because it is very, very important when understanding these markets and how they move and how structure shifts and how trends form and how, just markets are moving in general. Okay. So the trend is your friend. Trade with the trend, right? Obviously, it's hard for me to say at this point in the boot camp, it's hard for me to be like, yeah, the downtrend, it's hard for me to tell you like exactly where and when to execute, because we don't have all the pieces yet, right? This is just giving an overall umbrella, right? Find that overall umbrella, and again, we need to start on these main overarching themes to get lower and lower and lower and more exact, so we can be able to master these small, precise things within price action. But we have to understand the basics first. Okay, so right, what have we learned so far? We know how to identify a trend, literally higher highs, higher lows, lower highs, lower lows. Okay, there is another way that market trends, and this just reminded me of it. It's through consolidation. Okay, there's 3 different ways that market moves. Okay, it's either through trends or just consolidation, right? Look at this. Within here, right? Okay, we see a higher high and then we see a higher low, but right, like this is not a trend. When do we know that market's trending? If it continued higher like this, right? But no, it just stayed like this. It was stagnant. Didn't make a move until boom, right here. What happens? Okay, we're making highs. Before this break, we were going higher and higher, right? Then we chop it up, boom, we break.
I don't know if he explained it, but like here is like consolidation, right? Because there's higher highs, higher lows, higher highs, higher lows. Then the part where he says, then we chop it up, it's because the market is going nowhere and it's just basically like static, right? So it basically means that the market is consolidating, right? Whether it's going down or up, it's kind of like the bank is deciding where the fuck it goes, right? So boom, the market's like grabbed a few like micro transactions of like sell actions, and as you can see, like right there, it just liquidated like basically it just sold the market. Yeah.
Break the floor, we break the low, we change market structure, and you'll understand that when we get to the break of structure and market structure portion. But we break the low, and then what happens? Okay, we have high right here, low right here, high right here, boom, market structure shift. Right now, what are we in? We're in a downtrend. Okay, so what can we assume that gold's going to do, right? We came back up here, high, low, lower high, lower low, lower high. What's next? Probably a lower low targeting this area of liquidity, which we will get into eventually, right? But again, see how I was able to just take a very simple overarching subject and literally Like, this is you, like, this is.
I dare you to let me build you a completely free.
This is the guy. This is the guy. This is the guy I see every fucking day. On a daily basis, this is the motherfucker I see.
E-commerce store preloaded with 20 handpicked products that are trending all over the world.
I'm fucking tired of this motherfucker. By the way, today we're not gonna see any market movements since we are Sunday. Market opens like from Monday to Friday from I think 9 to 5 p.m. Unless you're trading Asian session, but nobody fucking cares about Asian session and nobody fucking trades there. It's like there's like zero volatility. Volatility. Tabarnak.
Volatility.
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 Volatility. Volatility, right? Volatility.
Volatility.
Liability to change rapidly and unpredictably, especially for the worst. And what's good about volatility on markets, well, usual markets, is because, well, we can use our techniques, but when there's low volatility, it's like there's no. It's basically like you're at a fucking casino, right? Like I'm not really sure. Like I don't really know Asian session that well. I've never traded on them. Because I will. It's the only thing that TJR is trading on, and it's the only thing he recommends. So I don't know why I would go against it, right? He's like a national fucking trader.
Some of you could be trading like this and be profitable. Don't believe me? Fucking try it. Some of you guys can trade this. Ideally, right, we don't trade this way so we get more optimized entries, right? So we can have tighter stop losses, right? So we can get higher risk reward trades. But some of you guys can trade like this. If the shit that I teach doesn't make sense to you, you can still do the basics. Okay? You can still do the basics. All right, so there we go. We know how to identify a trend. Okay, we know that it shifts momentum within the market. It shifts market structure. Okay, and it tells us the direction that market wants to go. Okay, we cannot be caught up. Notice how when I identified that trend, again, that trend is on like the 30-minute. Okay, but it's following the daily trend, right? We have boom, high, lower high. We have a low right here and another lower high, and then boom, lower low, another lower high, lower low, probably in the process of forming another lower high just to form another lower low, right? The daily is telling us lower, 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 lower. Perfect. So when we scale down onto a smaller time frame, we can say, okay, where does price want to go? We know on the high time frame it wants to go down. We're on a small time frame. Wouldn't it make sense for us to want to catch, you know, the big massive wave and not these little ticky tacks to the upside, right? We would want to find something that's going down, right? To continue that daily trend, right? So how are we going to do that, right? Literally just finding shorts on a small time frame, and we'll get there. We'll get to the point where we can execute. We're not there yet, okay? Because we just started, and hopefully you guys can be patient with this. But trust me, this will benefit you because I see so many people. There's a reason why you're losing in these markets, guys. There's a reason why you're losing every fucking day. Because you're not taking these basic, simple, very, very important strategies, not even strategies, just concepts. You're throwing them out. You're going completely off of liquidity sweep, break of structure, must enter. There's a liquidity sweep and break of, I could go on the 1 minute time frame and find a million liquidity sweeps and breaks of structure all throughout in here. All in here. I could do that a million times within this, right? Some of you guys are entering off of these little ticky-tack things, and it's like, no, that isn't going to get you winning trades. That's not going to get you high probability trades. What do you think is more high probability? Taking a liquidity sweep and a break of structure off of purely 5-minute price action, off of purely a 5-minute trend, and maybe like the help and the confluence of the hourly, or understanding where price wants to go long term, maybe on the 4-hour or the daily at least, right? Because we're working with intraday price action. At least know where we're going for the day, right? Because if you don't know where price wants to go for the day, you're going to lose. If you cannot understand where price wants to go for that single day, and you are trading intraday trades, if most of your trades last a couple hours, if not a couple minutes, you need to know where price wants to go on the day. Okay, and that's where understanding and knowing the trend matters. Okay, you have to be able to understand that. Okay, use your trend to your advantage, okay, when looking for small time frame trades. That's what I had written down. Okay, let's see if I missed anything. Where is the market going? We understand that, right? Literally just by reading the trend. And guys, like something that really helped me when I was first learning this, look, simplifies the fuck out of it. Where's market going? High, low, higher high, low, higher high, higher low, higher high, higher low, higher low, right? Oh, we get a trend shift, right? High, low. Oops, let me remove this.
If your project management tool doesn't show you everything in one place, you're missing the bigger picture. Motion gives you full visibility. No more guessing, no more chasing updates. Here's how it works. You enter a new project with its deadline, urgency, and estimated time. Motion automatically.
Right? We see high, low, lower high, lower low, lower high, lower low, lower high, not a lower low. Okay, we push a little bit higher, continue, right? And when that happens, right, what can we assume? It's just a retracement on a higher time frame. Now what's this? High.
Right, yeah, he's making a fair point. It's a lot easier to look at the market like this to spot Alright, yeah. So it's a lot easier. Yeah, freak. I should have done that a long time ago. Alright, so basically these lines I think are like the lowest point I think hit. Or not. I don't know. But yeah. You can clearly see the fucking trend. It's going upwards, right? Oh, that's not good. It's clear, like clearly something's up with my fucking chart, right? Because his chart looks clean and mine just looks like, it just looks like fucking retarded. Am I fucking dumb? Like this here is a consolidation, right? Because there's no higher high. I mean, there's a certain higher high to this, but like from there, where does he get the boxes? Okay. Supposed to come soon. I don't know if it's like that, but I can still like from there to like what there to there to there. You can clearly see that it's going nowhere. It's going nowhere. But if I were to do the same thing, whoa, what the fuck did I just do? Yo, what's this? What the fuck is that? Whoa. Where the fuck are we going with this? Oh yeah, these are just things I made up, I think. Yeah, what the fuck?
Low, lower high, lower low. Okay, right? We're understanding. Okay, and then boom, right? What happens? High gets pushed above. Now what? Higher low, higher high. Big dive. Okay. Use the line chart to your advantage. Okay. Like if we're looking at the 15, we scale down into this. Can tell you, right? Doesn't this look a lot simpler? To be honest, some of you guys really should be using this. Right? This makes this shit so much easier. Right? Oh, we're looking for it to hit equilibrium. Let's not get caught up in all the candlesticks. Okay, perfect. We're in a premium right now. Now what are we looking for? Okay, we're looking for a trend shift on the 5 minute. Okay, or the 15 minute, whatever you want. Okay, we're just waiting for these lows to get pushed down below, right? We're doing this, we're chopping up, we're consolidating right now because this was from Friday, right? Market just ended. It needs some volume to come in today because today is Sunday during Asian session, during Asian session and London session. And then once New York session kicks in, we'll be able to understand where price wants to go from there. But some of you guys could really benefit from taking out the color of the candlesticks, okay, and just identifying, right, where's price going? It's super easy just to zoom out on a high time frame and just look. Where was market going?
How do you take out the color of your candlestick? This is what I don't get. Top left. But chart style. Chart style. Where the fuck is that? Chart style. Mm, 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 mm. Mm-hmm. Do I need to download like the app? Go home. Yeah, let's leave. Top left. Top left corner. think I need a subscription. Alright, then I go to indicators, strategy, but I don't see a single fucking candlestick. Or maybe I'm just fucking blind, I don't get it. Indicators. Oh no. Oh no, this is not for me. Fuck. Select the pattern indicator you want to use. Bullish flag pattern.
If you're tired of being broke, this video is
In this video, I'm going to show you how you can change the colour of the candles on TradingView. For more tutorials, make sure you subscribe, and let's get right into it. So guys, as you can see, I am on TradingView, and first of all, what
Oh! Where is that? Chart property. Chart properties. I don't see a single fucking thing that says chart properties. Oh, settings. Boom! Boom! How does he put it? Alright, so like the outer layout, he just puts it black also. We bring the boom. That's what we do. We bring the boom. Oh, that's a lot better. Oh yeah. Oh yeah. That is so much better. Yeah, I like the way you can like kind of see like the wicks and stuff. Brace your eyes. Wait. Settings. We bring the boom, cause that's what we do. We bring the boom. Like just that is so much better. Like just because you can see the fucking borders, it's just like so much easier now. Like it's not fucking hard to understand that basically that this wick is red and this wick is, it's like, are you fucking stupid, bro? It's like, duh. It's like, okay. Okay, I'm getting brain rotted right now. Okay, so we are going to bring the boom, people. Oh yeah, now it's a lot more cleaner. I like this. I like this better. Okay, so that's done. Thank you, Google, for not helping me, you fucking bitch. Okay.
Lower. Perfect. So when we scale down onto a smaller time frame, we can say, okay, where does price want to go? We know on the high time frame it wants to go down. We're on a small time frame. Wouldn't it make sense for us to want to catch, you know, the big massive wave and not these little ticky tacks to the upside, right? We would want to find something that's going down, right? To continue that daily trend, right? So how are we going to do that, right? Literally just finding shorts on a small time frame, and we'll get there. We'll get to the point where we can execute. We're not there yet, okay? Because we just started, and hopefully you guys can be patient with this. But trust me, this will benefit you because I see so many people. There's a reason why you're losing in these markets, guys. There's a reason why you're losing every fucking day. Because you're not taking these basic, simple, very, very important strategies, not even strategies, just concepts. You're throwing them out. You're going completely off of liquidity sweep, break of structure, must enter. There's a liquidity sweep and break of, I could go on the 1 minute time frame and find a million liquidity sweeps and breaks of structure all throughout in here. All in here. I could do that a million times within this, right? Some of you guys are entering off of these little ticky-tack things, and it's like, no. That isn't going to get you winning trades. That's not going to get you high probability trades. What do you think is more high probability? Taking a liquidity sweep and a break of structure off of purely 5-minute price action, off of purely a 5-minute trend, and maybe like the help and the confluence of the hourly, or understanding where price wants to go long term, maybe on the 4-hour or the daily at least, right? Because we're working with intraday price action. At least know where we're going for the day, right? Because if you don't know where price wants to go for the day, you're going to lose. If you cannot understand where price wants to go for that single day, and you are trading intraday trades, if most of your trades last a couple hours, if not a couple minutes, you need to know where price wants to go on the day. Okay, and that's where understanding and knowing the trend matters. Okay, you have to be able to understand that. Okay, use your trend to your advantage, okay, when looking for small time frame trades. That's what I had written down. Okay, let's see if I missed anything. Where is the market going? We understand that, right? Literally just by reading the trend. And guys, like something that really helped me when I was first learning this, look, simplifies the fuck out of it. Where's market going? High, low, higher high, higher low, higher high, higher low, higher high, higher low, higher low, right? Oh, we get a trend shift, right? High, low. Oops, let me remove this. Right? We see high, low, lower high, lower low, lower high, lower low, lower high, not a lower low. Okay, we push a little bit higher, continue, right? And when that happens, right, what can we assume? It's just a retracement on a higher time frame. Now what's this? High, low, lower high, lower low, okay, right? We're understanding, okay? And then boom, right, what happens? High gets pushed above, now what? Higher low, higher high, big dive, okay? Use the line chart to your advantage, okay? Like if we're looking at the 15, we scale down into this, can tell you, right? Doesn't this look a lot simpler? To be honest, some of you guys really should be using this, right? This makes, right? Where's price? Smaller time frame, okay? That is what this is all about, okay? This was a very, very simple exercise and very simple thing, but hopefully you guys learn from this, and please do not forget it, because I know I forget it occasionally, and that's when I lose trades. That's when I fuck up. Okay, and my biggest recovery from you know, like having like a losing week, my losing week was because I was getting so caught up in the small time frames. I was not looking at the high time frames. I didn't even care where the higher time frames wanted to go. I didn't care at all.
Say goodbye to Slack because chat's here and it's inside ClickUp. Everything you need in chat is here.
Okay, but that was my issue. Okay, the second that I can start understanding, okay, the higher time frame wants to do this. How can I find an optimized entry to ride that next wave that comes down, right? To ride that next boom, fucking dump, waterfall down. When can I get that next? Okay, that's how you can get those good, high risk to reward, high quality, high probability trades. Okay, so do not take these early lessons lightly. I know you guys really want to jump right into the strategy, but trust me, the strategy is purely a step-by-step plan on how to execute. If you can't understand this, if you can't understand what price is telling you through candlesticks, what makes you think that you will know when to enter a trade if you don't even know where the market's going in the first place? Because the step-by-step rule, all those steps, those can be applied in either direction, high or low, or going higher or going lower, right? I could find a trade in both directions using that strategy on the same move, right? It's understanding where the market wants to go though. You have to understand where market wants to go. Okay, trade with the direction of the market because the market isn't going to move for you. Right? We see people blowing on their screens. Please go higher, please go higher, please bull, right? But like the market isn't going to listen to you. It's going to do what it wants and it's going to follow its own path. Okay? So with that being said, homework for today. I literally just want you guys to go on whatever pair you use and identify for this upcoming trading week, okay, because this is going to be posted on Monday. All right, identify for this upcoming trading week where you think price is going to go. Okay, make a prediction. Okay, based off of what you know currently, or just the bare minimum that you've learned so far from this course. Okay, identify where you think price wants to go for the week.
Homework time. Okay. I'm gonna close my eyes, right? Okay, so let's zoom in right here. I'm gonna try. Well, it's obvious because there's like fair value gaps like everywhere. It's like way too easy to predict it. Hey-ya, ho-ya, hey-ya, ho-ya. Yeah, well, kind of like this one right here. It's like, this one's like the most obvious. Like, fair value gap right there. Boom, big sell off. We ring them boom because it's in a downtrend, but then it goes up. Did it break structure? Nope, it did not break structure because the higher high is here. With a big ass candlestick like that, with a big ass bullish candlestick like that, when it hit fair value gap all the way up to the selling point, which is right about here. It started there. Boom! It bringed the fucking boom. There was a boom into this candlestick right here. This is why. Like SpaceX, bro. Alright, let's hide this. Here we go. Oh, wow, this is beautiful. Well, I already identified one. It's enough for me, right? It's enough! Enough is enough! Enough is enough. Okay. Okay, on va faire un autre. We are at break of structure.
Every trader on this floor uses these three main tools. Let's go and have a look what they are. Right, with the amount of trading tools out there, it's easy to get trapped.
This is insane. Like, this is borderline insane. It's like, imagine having this many fucking screens in front of you, bro. It's like, are you just like, you don't want to sleep? Like, you're just like, no, I don't want a life. I just want to see numbers everywhere I look. It looks like he has a 360 fucking view of, like, it's like, if he turns his chair, it's like there's screens, like, fucking everywhere, bro. Like, this is why I stopped trading, bro. There's way too many sweats, bro. Do you see this? This is insane. This is absolutely fucking insane. By the way, I need to go watch the news. I need to go watch the news. American news. Because everything goes on in America. Okay, Donald Trump, I knew it. NBC News, which one is the better? Okay. Next, ça va bien. Oh, TikTok's not getting banned. That is a great thing. Because America has been the greatest fucking entertainment for the entire world for the past, like, what, 4 years? It's a good thing. Very good thing. Shit, man. There's, like, zero good news. Okay.
Let's get it, baby. I know you love seeing my beautiful face every damn morning. What's good, baby? Welcome to boot camp day shit. Day 6, I believe. Welcome to boot camp day 6, okay? Today, we're back on it with the trading, okay? We are going to be talking about break of structure, okay? I figured, you know, we're gonna get the beginners right out. Hold on, there's a fly. We're gonna get the beginner shit out of here first so we can start getting into this, because right after this trading video, the next trading video is going to be talking about liquidity, so we can actually get into some shit. All right, so first we need to understand break of structure, because we've talked about candlesticks, so we know the little drawings on the chart, And now we know trends, right? Now we need to understand why and when the market's trending, and you know, when it actually switches direction, when it breaks structure, when it gets a market structure shift. Okay, so the simplest way that I can describe a break of structure is a shift in the trend. Okay, so we know, right, trends move in higher highs and higher lows. Okay, we also know, or actually I haven't even talked about this. Okay, so trends move in higher highs and higher lows. Okay, right, and then lower lows and lower highs on the contrary, right, in a downtrend. Okay, what makes up a high in the first place? This is something that I didn't talk about in the trends because I was going to save it for the break of structure video. Okay, so what makes a high? A move up, then a move down, right? High. What makes a low? A move down, then a move up. Low. Okay, so when we apply this to the charts, okay, it is literally as simple as that. A high, okay, is a move up, then a move down. A low is a move down, then a move up. Okay, so what does that mean? It only takes two candles. Essentially, it's a candlestick pattern. So if there is one green candle up and then a red candle down, that's a high. If there is one red candle down and then one green candle up, that's a low. It's not, it doesn't have to make a perfect little fucking shape, okay? It doesn't have to look perfect. It doesn't have to look pretty, because I feel like a lot of people, a lot of beginner traders especially, think highs and lows have to be like, you know, like look exactly the same, right? So let's jump into the charts and start outlining what a high and low even looks like before we even get into break of structure, because we have to understand what highs and lows look like in order to understand what a break in structure is, right? Because if that means the trend is changing, if we're saying a trend is higher highs and higher lows, and the trend changes, we have to know what those highs and lows even look like, right? So this is a perfect example of an odd looking high that people probably wouldn't even call a high. People would probably call this the high. No, okay? It's not, you can't just lump them together. That's not how this shit works, okay? So first of all, right, we do have a move up, then a move down. What does it consist of? Literally a blue candle, then a black candle. My chart is blue and black. It just looks cool that way, okay? That's why I have it, okay? So this is a high. Right, this right here is the high off the wicks of the blue candle right there. Perfect. That's a high. Okay, and on the contrary, right, we have a move down, then a move up. So what is this? A low. Cool? Cool, right? This again is still a high. It just doesn't look as pretty as this, right? Why? Because we have a blue candle, meaning a move up, and then a move down. Okay, it's two candles, and you're probably going to say, well, TJR, where's the high? Is it off the wick of this candle, or is it off the wick of this candle? Well, since a high takes two candles to form, you're going to take the highest wick of whichever of those two candles it is. Okay, so boom. We get this, here, move up.
So this is very important. I don't know why my microphone is so unstable, but alright. Basically what he's just explaining is that you can't choose any candle and decide that it's the higher low or the higher high or the lowest low. Like example, this is a high. This is a low. Wait.
Then a move down. What does it consist of? Literally a blue candle, then a black candle. My chart is blue and black. It just looks cool that way. Okay, that's why I have it. Okay, so this is a high. Right? This right here is the high. Off the wicks of the blue candle right there. Perfect. That's a high. Okay, and on the contrary, right, we have a move down, then a move up. So what is this? A low. Cool? Cool. Right? This, again, is still a high. It just doesn't look as pretty as this. Right? Why? Because we have a blue candle, meaning a move up, and then a move down. Okay, it's two candles. And you're probably going to say, well, TJR, where's the high? Is it off the wick of this candle, or is it off the wick of this candle? Well, since a high takes two candles to form, you're going to take the highest wick of whichever of those two candles it is. Okay, so boom.
Okay, now I understand, I think. Because this is important. A lot of people don't even fucking understand. We need either a move up and move down, or a move down and a move up, to understand kind of like the highest high or the lowest low. An example, would not have another example, like a pretty little example. Okay, like that's fucked. Yeah, like this here. So this is the this is the new higher high, and this is the new lower low. Or on the opposite, this is the lower low, and this is the, oh no. Yeah, like this. This is the new higher high, and this is the new lower low. Break of structure is like there, because this is the new, wait. Yeah, this is the new lower low. It broke structure, and the new higher high broke, yeah. So this wick right here broke the structure of this one, which mean boom. Okay, I'm getting the hang of it. Okay, we're getting there.
We got a high right here. Okay, and same thing down here, right? If this blue candle's wick was lower than the black candle, that would be the low. To form, you're going to take the highest wick of whichever of those two candles it is. Okay, so boom, we got a high right here. Okay, and same thing down here, right? If this blue candle's wick was lower than the black candle, that would be the low. Makes sense? Cool? Good? We got it? Hopefully I don't have to cover that. Hopefully I don't have to cover that again. Okay, we can go over another example. What is this? This is a high. Why? Because there's a blue candle, then a black candle. Literally, it only takes two candles to make a high. Perfect. Boom. We find the top wick between the two candles. Done deal. Okay. This is a low. Why? Because there's a move down, then a move up. This is a low. Why? Because there's a move down, then there's a move up. Cool? Cool. Same thing right here. This is a low. Why? Because there was a move down, then a move up. Right? If we scale into the 4 hour and look at this, this is the low, right? It makes sense that this would be the low and not.
If your e-commerce store isn't hitting 100K months, you're probably running the outdated classic e-com model. It looks something like this. Run Facebook ads, get
and not the start of the black candle, or not the wick of the black candle, because if we zoom in and look at it, what the fuck is that? Right? This ain't no low. The low's all the way down here, okay? So boom. We know what lows and highs are now. Perfect. Clap it up. We got like the super beginner shit done, okay? Perfect. All right. We know what lows are high, what lows and highs are, and if we know what trends are.
Right, we're just gonna rewatch this whole thing because he goes over it really quick, but it's also important to really understand it well.
The high off the wicks of the blue candle right there. Perfect. That's a high. Okay. And on the contrary, right, we have a move down, then a move up. So what is this? A low. Cool? Cool.
Okay. Sorry, I was just so locked in right there because I was trying to understand my hardest, but now I think I understand. So if I get the horizontal, okay, so to spot a higher high or a higher low or whatever, lower low, higher high, whatever. Well, depending on the trend that you are on, I think I am on a, well, right now I'm on a downtrend, visibly. So the break of structure, we're gonna try to find the break of structure, right? Because something shifted here and then it went to continue on a bullish trending. We're gonna find that. So here we have a move down and a move up. Sorry, I'm just gonna place it like here. So this is the lower low, well, the new lower low, and this is, there's a tiny bitchy wick there that you can kind of not see, but it's there, and this is the new higher high. Now, right off the fucking bat, you can see that right after this one, the new higher high was created. Boom! It finished there. Well, technically, you can kind of see because the market opened here and it's, well, not the market, sorry. The candle opened here and it closed here, which means first of all, it's not creating a new higher high, but it's also higher. It's also higher than the previous lower low as a bearish candle, right? Because this is a move down, a bearish candle. This is a move up, a bullish candle. And by the way, even if the candle went all the way over here, it still counts as a new higher high, technically, because we are creating a higher high in lower hose. We're creating lower hose and higher hose with wicks. Well, off of what he's doing, right? Yeah, he's putting these lines off of just these wicks. So it already broke the higher high. But then it even broke even higher, and then it broke even higher, and then there's a fair value gap, if I'm not mistaken. But still, it sold away over here. It opened here. Yeah, so it sold all the way over here. Then boom, next candle. We just can't see the fair value gap. The fair value gap is like either a bullish or bearish candle that just went off. So boom, it opened here. It sold here. And then the low was still here. We still have the low maintained. Boom. Fair value gap of going up. Boom, right here. Boom. It did not hit it a single fucking time, but we're gonna put new higher high. Horizontal. Because this is the new lower low. I know. Yeah, this is, well, technically we can't see it, but there's like a black candle or a red candle or just a bearish candle. And this is like the new, like, well, this is not the lower low technically, but this is the higher low. The new higher low. and a new higher high, which was created here. Which again, fair value gap, boom. Then consolidating a bit here. Well, technically this here is like consolidation, right? As I said earlier, it's like the market deciding if it's going up or down. Then boom, big push up, but the the buyers weren't strong enough for the sellers, and boom, it closed right here. Another one, boom, 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 and then it started going like sort of like up. Yeah. Which, by the way, the lower low is still here, technically, but this is a new lower low because there's a move down and a move up. Technically, well, I think this is what's called a liquidity. Hi, Isma. Hi, baby. ¿Qué pasó? Amigo. Isma. Come here, Isma. Come here, Isma. How do you spell liquidity? Liquidity. Liquidity. Okay. Liquidity. Here. Liquidity sweep. Boom. Up. There was like a price action there. Isma. Amigo. ¿Qué pasó? Wanna trade? You want to see what a liquidity sweep is? Mommy told me you pissed all over the fucking stairs this morning because the door was closed. Is that true? You pissed on the stairs. You fucking psycho. Amigo. Huh? This is my pussy. Say hi to Isma. Hi, Isma. Hi, Isma. Okay. Fuck out of here. We're trading here. Okay. Why do you... Whoa! Why is it not working? Okay. I look like a ghost.
Right? This, again, is still a high. It just doesn't look as pretty as this. Right? Why? Because we have a blue candle, meaning a move up, and then a move down. Okay, it's 2 candles. And you're probably going to say, well, TJR, where's the high? Is it off the wick of this candle, or is it off the wick of this candle? Well, since a high takes 2 candles to form, you're going to take the highest wick of whichever of those 2 candles it is. Okay, so boom, we got a high right here. Okay, and same thing down here, right? If this blue candle's wick was lower than the black candle, that would be the low. Makes sense? Cool? Good? We got it? Hopefully I don't have to cover that. Hopefully I don't have to cover that again. Okay, we can go over another example. What is this? This is a high. Why? Because there's a blue candle, then a black candle. Literally, it only takes 2 candles to make a high. Perfect. Boom. We find the top wick between the 2 candles. Done deal. Okay? This is a low. Why? Because there's a move down, then a move up. This is a low. Why? Because there's a move down, then there's a move up. Cool? Cool. Same thing right here. This is a low. Why? Because there was a move down, then a move up. Right? If we scale into the 4 hour and look at this, this is the low, right? It makes sense that this would be the low and not the start of the black candle, or not the wick of the black candle, because if we zoom in and look at it, what the fuck is that? Right? This ain't no low. The low's all the way down here. Okay? So boom. We know what lows and highs are now. Perfect. Clap it up. We got like the super beginner shit done. Okay? Perfect. All right. We know what lows are what lows and highs are, and if we know what trends are, and if we know what lows and highs are, then we can know when a trend breaks and when market structure shifts. Okay? Why? Because if a uptrend moves in higher highs and higher lows, but then it doesn't anymore, it ends up breaking, what is likely going to happen? Okay, it's going to start making lower lows and lower highs. And that is what we call a break of structure. Okay, meaning we break the trend that the current market is currently in. Okay, we break that trend and then flip market direction, flip market structure in the other direction. Okay, and break of structure is very, very simple, but for some reason I get lots of questions on it, and in this video I will try and simplify this shit so literally a child can understand it. Okay, I'm going to try and make this super simple. Okay, a break in structure to the upside. Okay, and we'll show examples of this on the chart and through drawing. Okay, a break of structure to the upside, so that means there is a downtrend currently, right? A break of structure to the upside is when we have a closure, a candle closure, not a wick, a candle closure above a high. And remember, what's a high? A move up, then a move down. So that means in order for it to break structure to the upside, we have to see a single candle close fully, meaning closing above this high, meaning the candle body has to be above the wick of the high. Make sense? Let's find an example on the chart, because I'm not sure this makes sense yet. because this is how I described the last video, and we still had questions. But that's okay. Questions are good. I'm gonna try and help you guys understand this.
From the makers of Lucid Chart.
We're so close to a breakthrough. I can feel it. We just need a way to put all our heads together.
Okay, so right here, we get a move up, then a move down, then a move up. Okay, perfect. We made a low right here. And as you can see right here, we had like a miniature uptrend. Okay, we come down, get a move down, then a move up. We get another low. Cool. I no longer care about this previous low. I'm only caring about the most recent one. Okay, and we'll get into that a little bit later into this video. Okay, I only care about the most recent high or low that has been made. As you can see here, we previously had broke structure to the upside, right? Uptrend. Okay, then we have this low, and what happens, right? We have a move down, then a move up, but then, right, we weren't in a downtrend previously, but what happens with this candle? The body of the candle closed below the low. So what happened? What did it cause it to do? Started a downtrend, right? Boom, lower high, lower low, probably going up to form a lower high, or retracement on the weekly time frame to come up within here. Okay, so are we starting to understand what a break of structure is? Now let's try and find a break of structure to the upside. This is just lovely, right? What happens? We were previously trending up. This gives us two perfect examples of this. Previously trending to the upside, right? We see a low. What happened to the low? The body of the candle closed below it. What happened to the trend? It shifted, right? We have a high right here. We have a low right here. Where's the next high? Right here. Where's the next low? Right here. Lower low, lower low, lower high. What's this right here? A move down, then a move up. That's a low. What's this right here? Move up, then a move down. That's a high. What's this? A lower high, a lower low? Wow, would you look at that? It's a trend. It's a downtrend because market structure broke. Okay, so now that we're in a downtrend, what happens over here? We have a high right here, and you're gonna say, oh yeah, it broke. Whoa, 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 slow down. We also had a high right here. Why is this a high, guys? Why is it a high? Because we have a move up and then a move down. We get a closure above it, okay? The candle closed above the wick, and then what happens? Bing bong, moves to the upside. Yeah, we did get a retracement down, but hey, look, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Continues, okay? That is break of structure to the upside. Now, what's break of structure to the downside? Well, it's when we have an uptrend and then schmink, a low gets taken out, right? Same exact thing, just in the opposite direction, right? Low gets taken out, okay? Boom, we start the downtrend, okay? Pretty simple stuff, right? Let me show you guys what a break of structure is not. And I think this is where a lot of people slip up. Right here is a perfect prime time example of this. Right here, we get a move up, then a move down. So what does this make? A high, correct. Right here, we get a move up, and then a move down. This wick goes higher than this wick, right? So technically, this high is higher than this high. However, we do not give no fucks. We do not give a crap. We do not care about wicks going above highs or going below lows. That does not mean anything to us. We need a candle close because as you can see right here, oh no, it's a higher high. What's gonna happen? Oh no, it falls? What? This isn't what TJR taught us. Well, here we are, teaching you this shit, okay? So, we get this wick going higher than this wick, but we don't care because it doesn't close above it. It is not a break of structure unless the candle closes above it. Write that down. It is not a break of structure unless the candle closes above a high or below a low. Right? For example, if let's say this black wick, let's say this wick went lower than this low, that would not have been a break of structure. That would not have been a break of structure. And this whole thing wasn't a break of structure until this most recent low got closed below. That's all break of structure is. Whatever the most recent, okay, ready? So we'll simplify this even more, right? It's literally a step-by-step execution of understanding where a break of structure is. Number one, identify the trend. Identify the trend. We'll even write this down. This will be good. Damn. Can be profitable but can't type. That's how it goes. Is that even the way? How to spell structure? I don't even know, and I don't care. How to spell break of structure. Number one, identify the trend. Okay? Where is it going? Number two, okay? Up trend or down trend. Okay? Number two, if in uptrend, okay, we are watching the lows, right? Because if we're moving up higher and higher, when are we going to get a break of structure? When the low gets taken out, when the low gets closed below. We don't care about the highs, right? We care about the lows, okay? Number three, if in downtrend, we are watching highs, right? For opposite reason, right? We're moving down, so the only way for this thing to turn into an uptrend, right, is for it to go higher, right? If it keeps going lower, we're staying in the trend. Got it? Got it. Okay? Number four, okay? Once you identify the trend, right, we figure it out. Okay. In order for it to be a break, again, I misspelled it. In order for it to be a break of structure to the upside, it has to close above, or actually we'll make this be a break of structure to the downside because we talked about we're watching lows for the first one. I don't want to confuse you guys. Wow, I can't even type.
This is how AI optimizes my schedule. This meeting got canceled. Hooray! We didn't really want to go anyways.
So in order for it to be a break of structure to the downside, which means it is turning from an uptrend into a downtrend. Damn, I wonder if I can make this smaller. There we go. It has to close below the most recent low. Does that make sense?
Okay. Well, that's called a liquidity. Sweep. Okay. So because right there it broke structure, but then it broke structure again. So it was like sort of like consolidating here, deciding what the fuck we're gonna do, you know. But it's It's lower highs and lower lows, lower highs and lower lows. Fair value gap. But then this is the thing I'm not sure I understand yet. Because I know this is kind of like called a liquidities. Tabarnak. Liquidity. Okay, so this is a liquidity sweep, but then it went up. So it's kind of like that sort of time, like you decide, like you're not trading off of that, you're just waiting to see how the market reacts, right? But you know, like here, to go on a new uptrend, because right here it just kind of to bullshit right there. Like from there to there, it was a downtrend. Because yeah, number one, we're on a 4-hour time period, so these are long ass times, right? So it's considered as a downtrend. So this is the new lower low. So this is the new lower high, a lower low, well, a lower low, higher, the lower high. But then it broke structure off of the lower low, and then it went baloney. And it's still going, it's still going, it's still going, it's still going. Okay. You can see it better like that. Well, to be fair, we're on a 4-hour time frame. If we go to like 5 minutes, there's a shitload of fair value gaps everywhere, but
Give me a nod. Yes, yes. Okay. Number 5. Oops. Number 5. It's the exact same, but just opposite. Let's see if I can spell it right. Structure did it for me. I love technology. Oops, I was just copying. Upside into an uptrend. Oops, bad grammar on a instead of an. In order for it to be a break of structure to the upside, which means from a downtrend into an uptrend. I'll even add that into there because that can get confusing, I know. Cool. So in order for it to be a break of structure to the downside, which means an uptrend into a downtrend, it has to close below the most recent low. Understand that we are consistently watching the most recent lows and the most recent highs getting formed. Okay, we are not listening or caring about past lows. Okay, so in this example, this gives us a perfect example, okay? Right, we make this low right here. This low, yes, it's lower than this one, but why do I not care about it anymore? Because this one is the most recent low that was made. Yes, price ended up closing below both of them, so we wouldn't have had an issue. But I know damn well that some of you guys, if it only closed below this one and not below this one, you guys would have been having a heart attack, shivering your fucking timbers, deciding whether or not to take a short. Okay, so we take the most recent low or high made.
Collaboration is key for team success. With ClickUp, you can easily manage your team's tasks and timelines in one app.
Okay, same thing with this. Same thing with this over there, right? We have a high right here. Oh, we make another high right here. Why is this? Why are TJR? Why are we using the wick of this? Because up candle and a down candle. How do we mark our highs? The highest point of those two candles. All right, the wick right there. We got it. We closed above that. Yes, we closed above both of these yet again. However, we don't care about this high anymore. Okay, there will be times when price will consolidate, right? Not within a trend, right? It'll just be consolidating, and you'll see a lot of that, right? You'll see, oh, move up, right? Right here, move up, then a move down. Now this is a high. Move down, then a move up. This is a low. Move up, then a move down. This is a high. Move down, then a move up. This is a low, right? This is just pure consolidation. There is no trend within however many days this was. This would have been a terrible trading week for gold, right? There was no trend within this. There was no break of structure. Market had no clue where it wanted to go. Oops. Okay. Does that make sense? I feel like that is the easiest way that I could have put break of structure at all. Okay? We have it laid out. It is a step-by-step formula. Number one, identify the trend. What's the trend? Look at it. Lower lows and lower highs. Perfect. We're in a downtrend. Okay, so we are in a downtrend. What are we watching? We are watching highs. Where's our most recent high? Right here. So in order for this to turn into an uptrend again, we have to wait for the daily time frame to close above here. We just gotta sit back, relax, and wait. This wick is not a high. This wick is not a high. This candle forming is not a high. If the next candle that forms is down though, then yeah, we'll move the high to there. But that hasn't happened. So where's the most recent high? Right there. Cool. And when does it turn into an uptrend? When we get a candle closure above there. Okay, we'll show one more example of a break of structure. Let me throw this on the weekly. Oh, this is money. Okay. Right here. Right, we're trending up. All right. Or actually, no. We'll go into like a 15-minute time frame. This'll be good. And again, remember guys, remember, I don't want you to watch this break of structure video and instantly be like, when there's a break of structure, it means it's gonna go up forever. Or when there's a break of structure to the downside, it's going to go down forever, because that is not true at all. Not true. Okay? Not true whatsoever. Because remember, in our trends video, if you have to rewatch that today, I highly suggest you do so. Remember, in our trends video, the weekly holds more power than the daily. The monthly holds more power than the weekly. If we see a break of structure to the downside on the daily, like we saw right here on gold, or sorry, on GU, right? Why is this a break of structure to the downside? Move down, move up. This is the low. We close below that. Market starts trending down. If we see a break of structure to the downside on the daily, but the weekly we're still bullish, it's just a retracement. Was this a break of structure? Little homework, little tip and trick for you guys. This was the most recent low that we had. Is this a break of structure? No! Why is it not a break of structure? You're probably saying, lower low. Shut up. We haven't closed below the low. We didn't close below. This is a perfect example of what a lot of you guys will be entering on. That just is not a break of structure. This looks like a liquidity sweep. And oftentimes, market will do this a lot to fake people out who think that a wick below a previous low is actually a break of structure. Because what's market probably going to do? It's probably going to come up a little bit. Okay. Yeah, maybe the next weekly candle will close below here. Maybe, if it wants to. But we have to wait for that. We can't just say, good enough, sell, right? Because we don't want it to be good enough. We want to know. And because even when we know for certain, we don't actually know. So why would we take a trade off of something that's already low probability of being a break of structure and already being in a market that's already very difficult to have a high probability to trade in, right? We're literally just reducing our chances of being a higher probability trader by taking bad setups like this, right? We need to wait for the low to get closed below. Same shit with this. Same shit with this. This is an exact example of this right here. Same thing with this. Right? What's this? Move down, then a move up. This is a low. At one point in time, this black candle right here, this was a full black candle to the downside. It looked like this. I know damn well that 90% of retailers were just short. It's going down forever. And then what happens? Market never fucking breaks structure and we push higher. Same thing here. Right? We get a move down, then a move up. No break. Move down, then a move up. No break. And market continues to push higher and higher and higher and higher and higher because the trend never was broken. Trend never broke. And what were these? These were just liquidity sweeps, and we will learn about that next time. Okay? Hopefully that covered break of structure for you guys. It has to be a close. Let's go back to that little thing that we had. Schmink. Let's do this on the daily. And let's drag this all the way up here. Identify the trend. Is it going up? Is it going down? Is it going in higher highs and higher lows? Is it going in lower highs or lower lows? Boom. I literally made a checklist for y'all. Figure it out? Okay, perfect. It's in an uptrend. If it's in an uptrend, we are watching the lows. Perfect. Hawkeye those things. Watch every single new low that gets made, okay? That's actually something that I want.
If you're not using a footprint chart, you're missing a huge bit of information. Why? Because a price chart, i.e. a candlestick chart, only gives you prices that have traded. It does not show you what has happened at any of those prices.
Because we only care about the recent ones that get made. Those are the only ones we care about. Okay, those are the only ones we care about. Those are the only ones that need closure above. Because who gives a fuck, right? if market's moving like this, or right, I mean, we showed it in that GJ chart, but if market's moving higher highs, higher lows, and then one of the lows gets wicked below, but it keeps going higher, we don't care about that, right? Because market structure never was broken. We only care if it gets closed below, right? Also, right, sorry, for the most recent low point, okay, we're going like this, right? Who cares about this low if this new low was already made? If it's supposed to move in higher highs and higher lows and the most recent low gets broken, gets closed below, then that means the structure is shift. Who cares about this one? It means we made a new low. We made a lower low compared to this one. Who gives a fuck about this? This was the trend. This was the most recent low. No one cares about this low. No one cares about this high. We care about the most recent ones that were made. Same thing for the downtrend. Okay, please drill that into your head. And I suggest you guys write this down. Okay, so we know that we're in an uptrend, and if we're in an uptrend, we're watching the lows. We're watching the most recent ones that get made, and we forget about the old ones. Okay, after the most recent ones get made. And then once it's a break of structure to the downside in an uptrend, it has to close. The candle has to close below that most recent low, and that's it. That's break of structure. We got it? Okay, so what I want you guys to do for homework is find 10 examples of breaks of structure. This should be very, very easy because it's pretty easy to spot, especially with this checklist. Find 10 examples of an actual break of structure within the market, and then find 10 examples of what someone, a noob who hasn't watched this course, who hasn't watched this video yet, who hasn't watched my how to spot a break of structure in the market video, find 10 examples of what someone might consider a break of structure, but actually isn't. A wick below a low, or like a wick above a high, right? Something that might fake somebody out, that someone might believe is a break of structure but isn't. So you guys can get good at spotting actual breaks of structures and then fakes. Okay? Do those two things. You need to have 20 examples by the end of this, okay? Until you're done with your homework. You need 10 examples of breaks of structure and 10 examples of fake outs or fake breaks of structure. Okay? Not real. All right? That's your homework. Make sure you get it done before tomorrow's video. I'll see you boys tomorrow.
Having an e-commerce store and a brick and mortar store, keeping track of inventory.
Yo, welcome to boot camp day. Yeah, I don't. Okay. Okay.